guys, Chuck Barone, Tuesday, July the 26th, 2022. Thank you for being here and watching the videos, supporting the channel. Guys, I don't know how much time all of you are spending watching this market, but it is really just, it's every day is so curious. There's no rhyme or reason to it anymore. The whole thing's just starting to get crazy. To recap today's markets, stock market today, horrible day, down day across the board, everything down. NASDAQ really gets punished. I think that the stock market is starting to coming to terms with this recession. I think that they're understanding that bad earnings are the reality now, as we'll talk about a little later. And I think right now, they say there's only two motivators in the market, fear and greed. And I think right now, fear is shoving greed out of the way. So stocks sliding down. I think that the real near term does not look good for the stock market. The bond market, on the other hand, the 10-year sitting at 2.78%. They keep saying that this is a flight to safety. They try to explain it as, the way I understand it at least, that the market is pricing in a pivot by Chairman Powell by the end of the year, where rather than raising rates to fight inflation, he's going to be in turn cutting rates to try to, preserve what's left of the economy by then. I don't know. I think that we all know what's going to happen tomorrow. We have a rate increase coming of 3/4 points. The way I'm calculating the Fed funds rate right now, it's at 1.6. So by the end of the day tomorrow, we're looking at 2.35%. That's overnight rates. How can you have a 10-year rate just 40 basis points higher, and that is in any way attractive to anybody? I don't know how to explain it. It's just, I don't know. I know that that's not the way I would be investing, especially if I was investing Brazilians of dollars like these bond traders are investing. It's beyond belief for me. The dollar today, another powerful day for the dollar, back up over 107 on the dollar index. There's really just no competition right now as far as the other world currencies go to the dollar. The dollar reigns supreme, and it's showing in the index, which is putting pressure on commodities prices, on obviously gold and silver. Another small down day for metals today. Gold closing at $1,718 per ounce. Silver, $18.70 per ounce. I think, as you've heard me say every day, guys, as long as this dollar stays at these kind of levels, going to be tough to see any kind of rally in metals. The oil market today, down day for West Texas Intermediate, closing just under $95 per barrel. Natural gas continues its big run, 888 for their million British thermal units. An interesting phenomenon today in the oil business, though. They have Brent, which is the North Sea oil, and they have West Texas Intermediate. And now there's a $10 per barrel gap between these two oils. That's got to be some kind of weird phenomenon. I understand that Brent is cleaner, refines better, but that seems like a pretty big gap for a barrel of oil. Bitcoin today down day. It's back in, it looks like it's kind of back in that trading trough between about 18,000 and 21.8, somewhere in that ballpark. I thought there was a breakout coming out when it had a couple of days broke out above 22,000. Now it looks like kind of support's not there, and it's settling right back in that trading trough. So we're going to see kind of how this goes over the next couple of days. I think it's going to kind of stay stuck there for a little bit. In the news you guys need to know today, some big stuff coming out. Earnings today. Just like I've been telling you was going to happen, guys. Earnings were basically a catastrophe. Walmart actually losing 9% on the stock market today. Their earnings were crap. McDonald's tanking. General Motors having a catastrophe for an earnings report. UBS. Aaron's, even the furniture place, or the rent-to-own kind of place. Newmont yesterday tanking. Brown and Brown. All of these earnings just... It's a recession, guys. Earnings are going to come down. The stock market's going to come down with it. Unemployment on the rise, as we've been talking about on the show repeatedly. Companies have been announcing big layoffs. The latest today, Shopify comes out. They're cutting 10% of their entire workforce. Bye. Today, the IMF comes out. They downcast their forecast for global growth. They see a worldwide recession. They said it's the worst slowdown in more than 50 years. You're seeing more and more delinquencies and defaults on loans, car payments, credit cards. These poor overnight and payday lenders are probably getting whacked pretty good too. I read an article that made me laugh. It said that 20% of Americans are afraid to go to their mailbox to get their bills out. People are really having a difficult time making ends meet right now. And as a result, another shocking, sad thing is the levels of personal debt right now continue month after month to set new records. Sky high. People are carrying big debt. They're adding more debt onto it. The rates on all of that debt, because they don't keep you at this lower rate on the $10,000 you already owe. You're getting a bigger payment for that plus whatever you're adding on. It's just the debt trap keeps getting worse and worse. And the sad part about it is you can be disappointed if it's people voluntarily doing it, just doing silly things with their money, getting themselves in debt. This, though, is different because people are actually having to go into debt just to take care of the basic necessaries for everyday living. Gasoline, food, shelter, basic. It just keeps getting worse, guys. It's bad. Now, the title of the video today is How Bad Will It Get? I'm going to give you guys some of my ideas of what I think we're going to see coming before this is all over. But before I do, I want to give you guys a little bit of background about what I've been studying and how I came to my conclusions. I've been studying this past inflation, the one in the 70s into the 80s. And it's funny that it actually started in 1968 with a big cut in rates that started the inflation up. Now back then, the Fed chairman was a guy named Arthur Burns. And he's famous for what they call the Burns blunder. And this is kind of what I see coming up again for us. What happened is inflation was running away. Prices were already starting up. Inflation was almost to 6% before the first oil embargo after the Israeli war into the early 70s. And the Fed was doing its thing fighting inflation. Well, then the economy started to tank. The Fed chairman was dealing with political pressure, literally political pressure from the President of the United States, Richard Nixon, who really was not a big believer in an autonomous Fed, an independent Fed, and put a lot of pressure on Arthur Burns to reverse course to try to save the economy. Nixon had tried price controls and a whole bunch of other measures. The economy was tanking. At the same time, inflation was running rampant. So he put this pressure on Arthur Burns, and Burns caved to it, started cutting rates back down. And the result of that was a double dip recession. So they got recession, raise rates, try to get out of it, and then kaboom, right back into recession again. Burns, not the most renowned of Fed chairmen. He, to give you an idea, when Volcker took over as Fed chair in '79, he raised the Fed funds rate 775 basis points his first 3 years. So he raised the Fed funds rate almost 8% his first 3 years. It capping out finally at around 17% on the overnight rate, guys. I mean, it was just blisteringly high. And that's what's going to happen to get this inflation back under control. You read these articles and people are like, well, the Fed might cause a recession with this interest rates. And are we going to have a recession? We're already in a recession. We're in a recession with inflation. The only way you're going to get rid of inflation basically is to cause a big recession. So Powell, making me laugh with this quote of the day today, he said now they're trying to engineer not a soft landing. And then I tell you what that means. Soft landing means Hindenburg. Now they're changing the language to a soft-ish landing, right? This is comedy gold, guys. I mean, these guys, they expect to be taken seriously, and I just don't know how you can when you hear this kind of silliness. Now, the reason I came to these conclusions I did is because I believe Powell is more in the vein of an Arthur Burns than he is a Paul Volcker. If you guys remember your history, Powell was raising rates. The stock market had a couple of bad months. The president was going crazy, President Trump at that time, tweeting over 100 tweets about the Federal Reserve, basically blaming them for any ills of the economy. We have a great economy, but a weak Fed. And Powell caved, started cutting rates again, gave the president what he wanted, and it led then on and on through continued poor policy to where we are today. Let's get to the conclusions. Here's what I see coming up before this recession inflation is over. I believe unemployment is going to get well over 6%, probably closer to 7%. And I believe we're going to see CPI at one point or another go over 10%. I think that there'll be record personal bankruptcies at the same time as there'll be more and more records set for personal debt. So this side of the ledger, there's going to be more and more debt piled on, and on this side of the ledger, more and more people are going to declare bankruptcy to get out of that debt. Now, I think the S&P will be down between 30 and 35% from its peak. I think the stock market's in for a rough ride, guys. I think mortgage rates you'll see approaching 7%. I think that you'll see house prices, at least here I'm down. When I talk about house prices, I talk about my local market here, which is similar to the rest of the country. House prices have to come down. Here in Vegas, I'm seeing a median price of around $325,000 to $350,000 from a peak of about $480,000. So I think houses are going to take a pretty good haircut. We're going to basically give back the last year and a half of appreciation or so to get houses to where people can afford to buy them at these rates. I think before it's all said and done, Powell gets the axe. I don't know if it'll be Biden that moves him out or the next guy, but before this is done, Powell will not be the chair, will not be the guy who fixes this. We're going to see the return of stagflation. We have this, we're actually in it right now, so kind of this how this feels, where you have prices and inflation going up, jobs and the economy going down. You're going to see massive, huge worldwide protests like you're already starting to see around the world in places like Sri Lanka and other places. If people can't feed their families, can't keep a roof over their heads, they only do one thing, guys. They don't just sit home and weep about it, man. They take to the streets, and we're going to see more and more and more of this. Not only here in the U.S., people will be protesting, but all around the world. I think you're going to see food shortages of certain particular foods, just like this baby food shortage. You're going to go there and expect a baby buy a loaf of bread, and that loaf of bread's not going to be there. It's going to be a big, shocking thing to a lot of people, and that's going to lead to my final conclusion here. Brand loyalty is out the window, man. The people who are this, this is the kind of bread I eat, this is the kind of drink I drink, this is the kind of whatever, where they have their brand loyalty, the one they stick with. I think that's going to go out the window. People are already doing that. They're shopping for stuff that basically gives you the same bang for the buck without the fancy name and packaging. And we're going to see more and more and more of that as this recession deepens. I hate to be a big neg, guys, sorry, but these are things you need to know because they follow what I've been telling you guys to do since day one we started doing this blog. Save your money, hold your money tight, invest it conservatively, spend it conservatively, be thoughtful. These are the basic finance stuff 101, and that's what we need to get back to right now to survive this recession. Anyway, I appreciate you guys taking the time today. Thanks for your support for the channel. As always, like, subscribe, ring the bell, questions and comments. We really appreciate you guys' support. We'll see you again tomorrow. Lots of news tomorrow. Thanks. Bye-bye.